the overall market rally we've seen has sparked renewed interest in the initial public offerings market, especially in the world of tech. Since Facebook's bungled listing last year, the IPO market has been relatively slow and lacking. But as Mark Niu reports, there could be a big turnaround ahead.
Silicon Valley, a risky place for investors after the dot-com bubble burst in 2000. Wealthy investors poured billions into venture capital funds that grew larger and larger. The tech sector bust led to a big decline in the number of exits because the VCs couldn't cash out their positions without big losses.
It takes about 10 years for the VC hangover to end.
Some investors believe that recovery could be soon.
If you judged by the private valuations of companies or on their level of revenues, there's more companies that would be available and candidates to go public than ever in the history of venture.
Jafrida says to keep an eye on companies in the advertising space like Criteo, which combines advertising with search, and Rocket Fuel, which creates advertising plans using algorithms written by NASA scientists.
There's a movement away from just the sort of internet broadly conceived consumer. There's a lot of herd mentality toward enterprise.
As for social media, falling share prices in companies like Facebook and Zynga have made many of their peers extra cautious about going public.
If you look at Zynga, it's been pretty much a disaster for the gaming market. And we have a number of great gaming companies that are just stuck, waiting for some opportunity to reopen that window.
The big two being watched closely are Pinterest and Twitter. While some investors have been staying away from social media, others say when people move in one direction, it's the best time to invest in the other. Mark Niu, CCTV, Mountain View, California.